Bloomberg Intelligence believes major Hong Kong developers could ratchet up competition in selling their residential inventory in 2024. Let's get next year's outlook with senior Asia Pacific real estate analyst Patrick Wong. Patrick, so Hong Kong secondary home prices have been falling. Tell us a little bit about what has been pressuring the market and what we're expecting in 2024.
For this year, we see the challenge for Hong Kong property, especially residential market. The major reason is that the interest rate increased quite a lot for the mortgage rate here in Hong Kong is over 4%, and we see the rental yield is still like something 3%. So that's why the investment demand is really slow, and it affects those developers to launch the new projects. So that's why we see the inventory level is already the almost 20 years highest levels in Hong Kong for the residential segment. So that is a really challenging situation for the developers to cut price to sell further for 2024. So that's why for this challenge, we could see the developers could cutting another at least 5%, 10% for the home prices for 2024.
Patrick, we're seeing some real estate developers like those trading in Sydney, some of the biggest gainers today on the back of signalling from the Fed that the tightening cycle is over. How does this potentially impact APAC real estate?
Yeah, this is also a very interesting situation because for interest rate, I think definitely over the past year is really challenging for affecting the overall market. Not just Hong Kong, also Australia, we see Singapore. So that is the problem across the board for APAC, maybe except Japan. But going to next year, if the interest rate is going to easing up quite a bit from the current peak level, this is a good signal for the overall market. And especially for some market like Australia, for even for some like Singapore, that could be a positive side for them. But for Hong Kong, it could be another challenge. Because for Hong Kong, we didn't move it up quite a bit, follow US in the past. That when the rate is cutting for US, for Hong Kong, the mortgage rate, that may take some time to adjust. So that's why for Hong Kong, I'm a bit more cautious than other markets.
Our Asia Pacific real estate senior analyst Patrick Wong there.